as the crypto market continues its recovery, there are always some naysayers out there who can't be happy with a good thing, and they have cautiously warned us all that the recent price action is nothing more than a dead cat bounce. But what even is a dead cat bounce, and why do cryptocurrency traders come up with such weird names to describe market action? We're talking all about the key terms that you need to know in today's video. Hey everyone, and welcome back. This is the Part-Time Economist, and in today's video, we are talking about the absolutely wacky terms that crypto traders use to describe the market. We're talking about falling knives, dead cat bounces, bear traps, whipsaws, a lot of really cool terminology that it's important for you to understand, but I want to be very clear. This is not a financial advice video. This is not an investing video. I'm simply explaining these terms so that you'll understand what they mean if you hear them while you're listening to a podcast or reading an article. Also, if you could like the video, share it, comment, totally helps the channel, and I do appreciate it. So, with that being said, let's get into this recent article by Cointelegraph where they're saying that Bitcoin is getting up to almost $23,000, approaching a 5-month high, but that there are some people who are suspicious of this and saying that it could be a dead cat bounce. Now, as the name implies, a dead cat bounce is something that is kind of misleading, right? And I apologize for the imagery here, but the idea is if you have something like a cat that's very tall and it falls, it's going to hit the ground, and just because of all of that downward energy, that momentum, when it hits the ground, it's going to bounce up a little bit. Now, this does not by any stretch mean that it's going to be fine or that it's going to be okay, because it's going to bounce and it's going to come right back down to the ground. You know the same thing. If you drop your cell phone on the floor, right? It's going to hit the ground. It's not going to come back up to your hand, right? It's going to bounce a little bit, but it's going to go right back down to the floor. And that's the idea of the dead cat bounce, is that it's not something to where this is a recovery, right? This is a lasting uptrend. No, this is a downward falling asset that has a little bit of a bounce and it's going to continue plummeting. So that's a dead cat bounce, but I thought it would be interesting to cover some of the additional terms that you may hear, specifically this idea of a falling knife. Now, again, they come up with some pretty dramatic imagery here, but it serves a purpose. The idea is if you are in the kitchen, you're cooking something, and you drop your knife, right? Now, you might think, I don't want to wash this knife, right? I'm going to just catch it before it hits the ground so it doesn't get dirty. That is extremely dangerous because you could injure yourself, right? You could cut your hand. The same thing is true in the stock market or the crypto market. The idea is that there is some asset and it is just rapidly falling. If you buy in here and you think it's the bottom, well, it still has a long way to go. And that brings up a good point, because each of these terms is pretty subjective. There's really no objective definition because we can't predict the future. If you and I are both looking at the same crypto and I see it fall 10%, I might think, hey, this is the bottom. This is a great buying opportunity. You might say, hey, it has fallen 10%. It's got 30% more to go. This is a falling knife, right? So the definition here is what's important. Not saying this is a falling knife, that isn't a falling knife, but knowing if someone calls something a falling knife, what are they implying? What are they insinuating? Well, they're insinuating that it has got a long way down to go. But just as I gave in that example, maybe I think this is a good buying opportunity. So if I buy into something that you consider a falling knife, what am I hoping for? Well, I am hoping for a whipsaw, which is a trend that is moving in one direction to quickly reverse, right? So let me give you an example here. Let's suppose the government comes out one day and they say we are 100% banning every single cryptocurrency, totally forbidden, don't even think about having them, right? And everyone, I mean everyone, just starts selling. The price goes down 30% in an hour. Everyone is telling me, don't buy any crypto, get out of it while you can. And I go ahead and I buy in anyway. Well, I realize that it is actually April 1st. April Fool's Day, and the government comes back out and they say, hey y'all, we were just kidding, we were just joking. Bitcoin and crypto, they're actually going to be legal tender now, so pretty much everyone needs them, right? The idea, and I know that's not a realistic example, but the idea is something is going down, 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 and it has a sharp reversal, right? If the government goes from saying we're banning crypto to you must have it, right? It's going to have that quick reversal there. Now, typically when we think of a rapid price movement, right? We have this falling knife, right? And that's typically downward. Sometimes we can have a upward price movement, right? Something that people are generally hoping for. We can call this a spike, right? So a spike is just a rapid price movement. Now, it can technically refer to either a downward movement or an upward movement, but typically you will hear it referred to as an upward movement, right? Because we already have falling knife for downward movement. Spike, again, it can be up or down, but since we kind of have a similar term already for down, most people will use spike as upward movement, which again, totally makes sense when you think of like a spike sticking up in the air. A couple others that I wanted to cover were the bear trap and the bull trap. Now, when we're in the market, of course, we never actually know what tomorrow or the next minute is going to bring. So let's suppose that we have a positive outlook on the market, right? And things are going down, but we think, you know what, it's going to turn around at some point. And we get one piece of good news, right? And the market does start to go up a little bit. So we say, hey, this is the reversal. This is the change of the trend that we're looking for. We are going all in. Well, the next day, the price just keeps dropping. That little upward movement that we saw, that we thought was the changing of a trend, was nothing more than maybe a dead cat bounce. So what we do, we buy in, and then the price goes down further. We lose a lot of money. That's a bull trap, because someone that is a bull, remember, think of a bull, it has the horns, it attacks people by going upward. So a bull thinks the market is going to go upward. They see that upward price signal, they buy in, and then of course it was a trap because, well, there is no upward price movement. A bear trap, kind of the opposite. A bear, think of a bear, how does it attack? It attacks by clawing down. A bear is someone that thinks the market is going to go down. So let's suppose we're in a market that is going up, up, up. They say, okay, this is the top. Some kind of news comes out. The price just has a little teeny bit of a dip. The bear says, okay, this is the time. I'm going to go ahead and sell. Or to be more extreme, I'm going to go ahead and short this position. Well, what do you know? The next day, the market reverses, and now the bear has lost their money. So there's two key things that I want you to understand here. The first is that none of these terms are specifically objective, right? What you think is a falling knife, I might think is a buying opportunity. So when you hear these terms, I don't want you to think of them as like a diagnosis, right? If someone says that a stock or a crypto is a falling knife, what does that mean? Well, it means they think it has further to go. It may or may not, right? It could, as soon as they tell you it's a falling knife, it could go up 10%, right? So when you're listening to a commentator or reading an article, don't think of them labeling something as a falling knife as an objective factual statement about that asset. It is more reflecting their view of what they think is going to happen. Also, you will see that there is considerable overlap between some of these terms, right? So a dead cat bounce could very much also be a bull trap, right? We have other names, suckers rally, bear market rally, right? Things that kind of overlap. So again, not financial advice, but I thought some of these terms were pretty cool to go over, and especially pertinent given the recent price action in the crypto market. I hope you learned something in the video. I appreciate you watching, and I'll see you next time.